Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. We're going to look at the dollar, gold, oil, and natural gas as we head into the second week of June. So starting off with the dollar, we're going to start on weekly time frames and then zoom in. And the weekly time frame is showing a shift for bullish momentum with the cross of the 12 period over the 26 period exponential moving average. I use these moving averages for cryptocurrency, but I'm starting to keep them around on my other charts as well because they have been giving some nice signals in terms of their crosses. We had the bear cross and we pulled back for a few months. We had a bull cross and we had a few months of upside, bear cross, many months of downside, and now we've got a bull cross again. So we're going to see how long the bulls can hold on to this. And the consolidation we're seeing right now is very healthy. We had a bearish reversal candlestick last week. We were confirming it and following through, but we're looking to form a weekly higher low after seeing a very bullish mid-April all the way to mid-late May. So we're looking to establish a higher low. I'd say anything above 92 is very healthy for the dollar on the weekly time frame. And we're looking at the potential of a major break of resistance that can be seen on the monthly time frame, where we're looking at resistance, lower low, and a double top right at this level of 95.03 and 95.15. So if we can see some healthy consolidation and then break that resistance level, that's going to be a major long-term shift in the momentum of the dollar, which has been bearish since the start of 2017. So watching for that trend change, and we're going to need to see weekly higher lows and higher highs to continue that. And you could make the argument that this is the psychological setup of a cup and handle pattern where we have the left side unable to break, or I should say the right side unable to break the left side of resistance, and a healthy handle of consolidation before a breakout of resistance. That's something I'm keeping an eye on as well. Daily time frame, upper wick of profit taking, so not confident that our daily higher low has been set yet. And the 4-hour time frame has to change the trend for us to gain that confidence. And we did break the lower highs on the 4-hour time frame with a solid move to end the week. But same thing, we need to consolidate, form a higher low, and then break resistance of 93.82 for the bulls to be confident that our daily low has been set and our weekly higher low has been set, and that the bulls are ready to show back up. So that's what we're keeping an eye on at this point. The 4-hour time frame has a nice, clear pattern to be watching. Can the bulls break to a higher low and higher high and shift this momentum? And we'll get that answer probably on Monday, if not Monday, by Tuesday. So looking at gold, the inverse relationship between gold and the dollar, let's look at it on the weekly here. It's shifting. It's not as strong inverse because we pulled back for 2 weeks on the dollar, and gold hasn't really done much for the bulls in 2 weeks. So not only is gold being hurt by dollar strength, but when the dollar sees consolidation weakness, gold is not benefiting much from that. So this relationship definitely favors the dollar bulls and the gold bears at this point. And we're looking at multiple weekly inside bars heading into this current week with a break of 1289.96 bearish and 1303.30 would be bullish. So multiple weekly inside bars in a row, which tells us the daily chart is really tight with our low, high, higher low, lower high, lots of upper wicks, still rejecting from exponential resistance. And we're going to be watching that weekly range to give us direction for this week. And we should see a break sooner rather than later. So patiently waiting for that for more clarity. But until then, it is very clear that it is the bear miners and gold bears that are currently in control. It's up to the bulls to change that and prove themselves. Checking in on oil, the weekly time frame for oil. We pulled back for 3 weeks. It's absolutely a significant pullback from 72 down to 65, about a 10% pullback, but it's still very healthy because we haven't lost the weekly higher low pattern. The last clear support level established on healthy consolidation was 61.84. So we're going to form a higher low compared to this level, very likely. We're just looking for it. And we do have a bullish reversal candlestick on the weekly time frame with a long lower wick. So the bulls are trying to make 64.26 our new higher low, but we need to see the daily trend change for us to be confident that that is the case. Right now, it just looks like a potential bear flag on this bounce, so we have to be cautious of another leg down. We need a daily higher low and then higher high to change this trend and for us to be confident that consolidation is done. And right now, this current setup does not have me confident because, again, it is a bear flag setup at this current point. The 4-hour time frame got a little volatile at the end of the week, but we're looking down at essentially a double bottom, Bulls trying to form a higher low. Short-term support 65.13. Short-term resistance is 66.20. And have to break 66.20 convincingly to start this week in order to negate the potential of the daily bear flag. If we do confirm the daily bear flag and drop down to a lower low, the daily RSI will be approaching oversold again, and we'll be looking for an entry in the $63, $62 range if RSI levels are oversold enough, because again, we'll be using this previous weekly support of 61.84 as a base level of support that we're going to be playing off of. That's looking a little bit ahead into the future. We'll take it one day at a time and watch the daily for signs that this is a bear flag if we drop down and lose the daily higher low pattern in the last few days, or not a bear flag by seeing continuation more convincingly over 66.20. Natural gas is getting tight, multiple, or actually just one inside bar on the weekly, but it's giving us a nice daily equilibrium pattern. And we're going to look for this to break this week, where we have our high of the bull move, our low of initial consolidation, lower high, higher low, lower high, which was essentially a double top, and now a higher low, which is essentially a double bottom. So the range I'm watching is 2873 support and then up to 2988 resistance. Those are the two levels to be watching. We're much closer to a bear break than we are to a bull break, so the bears definitely have favor in this pattern. And if we do see a bear break of this pattern, we look to the weekly chart and we're looking for a higher low anywhere above 2722, keeps the bulls in control of the uptrend with a higher low pattern. So that's really the only risk that the bulls are looking at. Obviously, if we break that daily equilibrium bearish, means further consolidation is coming down to the lower 280s, but it's not game over for this longer term trend. The bulls have established themselves after the breakout the last few weeks. So that's where we stand on commodities and the dollar as we head into this coming week. We're watching to see, can the dollar bulls turn things around after healthy consolidation? Gold bears still in control. The bulls have to turn things around there, and they're not seeing much sign of that just yet. Oil we're watching for is that daily pattern of bear flag, and natural gas, daily equilibrium set to break. Appreciate you watching. Have a good rest of your weekend.